I like to look at the far right-hand column, and this is going to show you essentially the net change week to week. Net change was 3.99% to the long side. That's bullish, right? So I am still long. This thing just does not want to end. If I was being really aggressive with a stop, what I would do is I'd trail it below here. Quick look at gold. I'm going to be very honest. I'm kind of frustrated by gold right now. I was hoping for a redemption trade. First thing foremost, I am still long the pound and happy to stay long the pound. We take a look at the smart money tracker. It's got something interesting here. Look at the pound. Look at this. Check this out. GBP, 58.81% net positions are long. So a slight preference from institutional money to be long the pound on a longer term basis. But check this out with me, guys. Look at this. We scroll down. The money flow is what I like to look at the most. It's the week to week. The money flow is an indicator that we created, just basically a table built out of the COT data that we formatted in a way that I think is a lot easier to understand. What we can see is that this is week to week changes. This is like the latest money moves, if you will. Again, this is the non-commercials. This is the COT data. We're tracking essentially hedge funds, institutional money, speculators, large speculators specifically, right? So when we look at the pound, the GBP here, I like to look at the far right-hand column. And this is going to show you essentially the net change week to week. Okay, so check this out. Net change was 3.99% to the long side. That's bullish, right? So pound, this gave me some extra confidence in my trade on the pound USD. So I am still long. I like that we see big money kind of moving in on the pound. I like to see that. And you know what else I like about it, guys? Check this out. Flip the script. What about the dollar? Because remember, currency pairs are, if you're an FX trader, you are always trading two things at once. In my case right now, I'm long pound, short dollar. You cannot, if you're gonna trade a currency pair, you gotta be long one, short the other, right? That's how that goes. So when I see both the pound getting bought by institutional money and the dollar getting shorted by institutional money, they picked up 2,244 short contracts in the latest filing. Wow, right? That's a big shift. I believe these are in multiples of like 1,000 or something crazy. It's a huge amount of contracts, right? Big shift, 4.56% short. And you combine that with the pound, again, that is going to give us on the top setups algorithm. Well, no, it's not. It's getting a +3. Still, pound USD was a bullish setup. It's kind of fallen off, perhaps. Actually, what is the pull away? Economic stats, inflation, labor statistics, interest rates. Trend is still up. Well, when I bought it initially, it was in the bullish camp, so it's come down a little bit. But regardless, the point is, overall, Edgefinder is pulling in all that data. It's looking across the matrix, if you will, and comparing all these different nodes. I think that what's interesting here is that you look at the pound, you say, well, institutional money seems going short the dollar, long the pound. I like the trade, so I'm going to stay in it, right? I mentioned that I need to update you guys on the S&P real quick. So I am still long. This thing just does not want to end. I'm definitely not complaining because it just wants to keep going. I'm fine with that. But I am starting to get a little bit like challenged by where I trail stops here because I have to drop down to the 4-hour chart. It makes a little bit more sense when I look at the 4-hour, right? When I look at the 4-hour here and I say, okay, well, we've consolidated in this region before breaking out again. It seems like if I was being really aggressive with a stop, what I would do is I'd trail it below here. And that might be very well my next move. If we scream higher, right? If we certainly clear this level, and one way I like to quantify this is a little bit of a trick here I use with fibs. Check this out. This is too much information, but if we can get somewhere like up to 47.66, meaning that this area then becomes a potential 38.2% retracement, that is one of the ways that I like to quantify, oh, it's time to trail stops. Okay. I use fibs because look, we haven't actually reached that level. So the fib, this is not yet a 38.2% retracement. If we pop higher, that is a way I like to quantify, okay, we have thoroughly broken out of a region. This is a cool trick. And you guys might use this in your own analysis if you find it valuable. I'll draw a fib, an imaginary fib, and say breakout hits 47.64, then suddenly a 38.2% retracement is at 47.44. Does that make sense?
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert trader signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
Quick look at gold. I'm going to be very honest. I'm kind of frustrated by gold right now. I was hoping for a redemption trade. I'm not talking about a revenge trade, but I have been really, I'll be straight up. I've been really off with gold in the second half of this year. First half, I had some pretty good trades on gold, but second half, I've just not been able to nail this one correctly. And I was looking for this pullback. So for those of you guys watching gold, let me give you my thought process, and it might still come into fruition. We'll have to see. My thought process was, okay, Fed's looking to cut. Boom, gold bullish. Lovely. What do? Well, wait for a pullback. And this has been the story of my life with trading gold recently. I'm constantly waiting for the pullback and missing the pullback. Does anybody else feel that way? Anybody else feel a similar frustration with gold in particular recently? Type yes in the chat. If you feel like, yeah, same, then it's been frustrating because I feel like I've been decently right about the direction of gold, but either early or waiting for pullbacks and missing it. A bit frustrating, to be completely honest. And I've been doing, like, I just want to say, you know, I try and say those sorts of things when I'm feeling them consistently because I've been doing this for what feels like a long time. I've been doing this for like 8 years. So please understand if you're newer to this stuff and you feel those frustrations, I hate to burst your bubble, but those feelings don't go away. There's always kind of a frustration with trading. Trading is like constant frustration. Anyways, let's talk proactively. My opinion for gold, I'm still looking at that 2061.8% retracement as a pullback zone I want to be a buyer at. And if that means I miss the trade, then so be it. You know, it's okay to miss trades. It can be frustrating and it's okay to acknowledge that. But for me, the trade pullback here to 2000 is the only real thing I see right now. However, there is one other context in which I look to buy gold at actually a higher price than where it currently sits. And that is the idea that, well, take a look here. You've got what is currently acting as resistance. Take a look at supply here. Okay, so resistance. Here's my concept with this, okay? So 2000, obviously, good pullback zone for me if I can get it. But what I need, the alternative for this, remember, let's get the pullback trick going. I would need a breakout up to like 2054, followed by some sort of pullback to get me there. Remember my trick. You guys, a lot of you typed yes that you understood that trick that I pointed out with the fibs. Draw the fib from the swing low to your hypothetical new high, right? And that would tell you, okay, hey, it's a strong breakout. Cool little trick there. So again, that's what I'm looking for. I would either be, in my personal view right now, currently as we record, it can change in the future, break and retest setups at 2040, let's call it, or significant pullback to the 2000 mark. I'm interested in both scenarios. So scenarios. Anybody say scenarios? Is it scenario, Mario, or scenario? Is it? What do you guys think? Scenario or scenario? Sounds like you're saying Mario when you say scenario. Scenario. S&P pushing here this morning, staying strong. But you know, this thing is, it's so weird. It just does not stop grinding higher. It's almost like so much money is just flooding into this system right now. And probably, I would argue that a lot of that is the money markets. If you haven't heard me talk about this, money markets are, you know, if you're not familiar, money markets for many banks, it's like a, that's so weird how StreamYard does that. Can you guys still hear me? My streaming software sometimes just blinks and everything goes missing and then it comes back. Let me know if you can hear me. Just type yes really quick. That would let me know that we're good. Scenario. Okay, trucking says Mario. Scenario. Yeah. So what I was saying is that my concept with the S&P, things can stay bullish for a lot longer than people oftentimes think. If you've been shorting this thing, it's been just a rest in peace rally. If you've been a bull with my style of trading, there has never been in my trading career a better scenario for trailing stops. This is the best trade of my personal trading career. I bought this thing in the beginning of November. We tracked it all live on the stream. I mean, the initial trade, the whole VIP signal was sent from the very beginning until now. We are still trailing this stop. And for my style of trading, there has never been, in my personal trades, there's never been a better perfect rally. I have trailed a stop loss on this trade several times. Pound USD rallies with the dollar yen dropping. So I already have the trade on. Stop loss is trailed, as I mentioned. Entry is still intact here. Caught that move here on the Fed speak that we had, and would absolutely love to stay in this trade if I can. I've trailed my stop loss below this pullback. We found buyers here. It's definitely confidence restored here a little bit in the trade. Pound USD staying strong. Looks like it wants to retest the highs, and my next point of contention is, can we break through the highs? At which point I'll trail a stop further. But again, risk is off the table. I have 2 trades open right now. Well, 3 trades open right now. I have a Russell put that I sold, S&P trade still going, and I am also long pound USD with a stop loss trailed into profit. In terms of pending trades, as I mentioned, trades that I'm not yet in, I'm watching gold for either a pullback or a break and retest. Both scenarios look pretty interesting to me. So here's the daily chart on the gold market. Still looks really intact. And I like the story here. I like the fundamentals for gold right now. What did smart money do with gold, by the way? Let's take a look at that. Gold kind of sold it. So hesitant there, but I still like the overall story. And if we take a look, by the way, let's go take a look at the COT indicator. Give it a second to load here. So I'm going to go to gold here. And this one always takes a minute to load. It's pulling a lot of data to do this, but there it goes. Okay, so gold, this is the historical price of gold. This is the COT net positioning. And by the way, this new indicator that we've been working on, net retail sentiment, can also be cross-examined. Pretty cool. Frank and Giles on our dev team did a wonderful job putting this together. So Roberto, I love that. Traded my demo for 3 years and took, do you know how much money would be saved if people stayed on demo for 3 years? Do you know how much money would be saved? Countless amounts of dollars. So many people just trade right away. They just jump in. No education, no demo, no back testing, no learning. Just let's make some money, right? And then boom, you just became part of the system and just spent money into the system, right? That's essentially what so many traders do. If you want to take the stuff seriously, I'm telling you, it is a lot of work. Anyways, taking a look here, price of gold has been on the rise for the last, few days here since, you know, we've bottomed out around December 12th, December 13th, December 11th. And what we can see here is that retail sentiment and smart money tracker. So institutional money has been increasingly bullish, which is interesting. You know, you've seen this bullish change, whereas back over here, you can see institutional money, which is the orange line. They were bearish over here, catching that sell, and then now they've become bullish over here, which gives me a little confidence. Overall, sure, maybe week to week there wasn't anything super interesting, but overall, story seems institutional money is net positive on gold right now. I really like this chart, by the way. Frank and Giles, you guys did awesome with that. While we're on the topic, let's look at S&P. I find this one to be very, very interesting as well. Institutional money, the second half of this year has just been buying. Even through this dip, this was the tell. I don't know if you guys remember, some of you who are like everyday fans, Frank and I kept looking at this during this period of time. Check this out, guys. This is the S&P 500 trade or chart crossed against COT net positioning. Check this out. If you're someone who's been watching the streams, then you might have remembered during this period of time, Frank and I kept pointing out, hey, this is really interesting. The price on the S&P kept going lower, but institutional money kept buying. So again, reminder, COT net positioning is this blue circled area. The yellow circled area is the price of the S&P. The S&P was going down while institutional money was building a big position. And then look at what happened. The rally. You can't make this stuff up. Sometimes it is just too interesting when you see institutional money flowing in and the chart itself going down. That has got to be an interesting indicator to keep a close eye on. It's why we track COT data so close. Again, if this is something you're interested in, we just added the COT indicator. If you're somebody who does have a copy already, click on this COT indicator, play around with it. It's a really cool new chart here. And you can also see it's just starting to collect data, but we also have retail sentiment also showing up. This is interesting because look at what retail is doing. Getting more bearish. They've been getting more bearish the whole way up. Isn't it so peculiar how markets work? At the end of the day, sentiment is huge. It really, really interesting.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.